Hello everyone, Sam is here from creativetrading.com, making this small video about gold. So let's get started here. I'm not going to take you too far back, only starting from September. So this is one of the gold weekly chart I made. This was a second scenario. The first is if we break above 1959, then we will go to the upside. Second scenario was that we might not be able to break this 1959, and then in that case, we're going to go down to 1802 and then probably going to bounce. So that's exactly what we did. We came down to 1802. So I made another chart on 7th October, right? That from here, we're going to bounce and go back to 1959 and break that and go to the upside, right? So what happened then, we start to go and then we broke above 1959. Then I said that we're probably going to go to this area, 2009, or break above that and then go to 2080 and then break that, we go to the upside. So what happened that we went, going to the upside, these are few trades that I took. This is one of them on the 25th. And then I had another on the 25th, another one after the retracement. And then on the 27th, I made this chart saying that, okay, now we're probably going to go to the upside here to this area, 2080, right? And then this is the chart on the 27th October, up move. Now, going there, on the 27th, this is the trade. I couldn't make the chart because I had the target set up and I didn't know that we're gonna get that fast. So I went to sleep and boom, my target hit. So just showing this dot here and the dot there. So, this is the entry, this is the exit. Perfect butterfly pattern at 161%, and 2003 was right there. So my trade was closed here on the 27th. Now, next was said, okay, this is the chart that I made on the 28th October. Two options sitting at 2009. If we break above 2009, then we go to the upside. If 2009 hold, then we're going to drop back to 1920. Step by step, though. First 1987, then 1965, then 1959, then 1920, right? So this is how it's supposed to be coming down. So what happened? A few days gone by and we didn't go to the upside above 2009. So I said, okay, no more to the upside. We're going to just drop here. This is the chart on the 4th saying that, okay, we're going to drop. First is 1987, then 65, then 1959, then 1920. So what happened? Coming down, this is one of my trade here on the 6th. Beautiful entry here. All the way down here, I posted on the Telegram step by step that we're going to have, the first target is 1973, second is 1965. And then this is on the 8th. This is from, it retraced here and then again from here to 1949. That's on the 8th, right? So we're coming down here so far up until 1949, right? So now I made another chart. This is the most current chart as of today. I made that we are sitting here. We are at 1958 right now. So we kind of like bounced from 1949, didn't go below all the way to 1920. We still have a chance to go there, by the way. But right now we are above that, and we are very close. Well, 1958, 1959. So we are at 1959 again. Looking at the week, my 4-hour chart, 40-minute chart, is this. So you see 1959, we are at, this is how we bounce again. And then it's like small retracement, 1959. It's a very good chance that we continue to the upside. All right. So this is what the current chart is. And now I made the current chart, like I said, that this is the key number is 1959. If we can stay above that and then continue to the upside, then we will go back to the, on the ladder, same way as 1965, then 1987, then 203, then 2009, and then so on and so forth. Again, to the upside. Okay, but the key number is 1959. Pay very close attention to that. This is how it is. My entry chart is going to be this. So this is actually is making a, kind of like a long setup, but it's not the right time. that I take the entry, right? This is a very slow dead time almost. So in London session, I will see if I can find a nice entry and then go to the upside. But the key number is 1959. If we go down below 1959, no more long, then we look for short going to 1920. If go above, continue going to the upside above 1959, then next is 1987 and more. Okay, this is how it is. Another version of the chart, this chart I made when we were coming down is this. On the 4th, I made this gold, 40-minute chart. Elliott wave corrections like A, B, and then I said that we're gonna come down here, 1965, and then 1959, this fashion. So what happened in this chart? You can see that we came down to 1965, bounced a little bit, 1959 actually all the way, then bounced and then came all the way to 1949. And now we are bouncing, and this is where we are at now. So this is how the gold is behaving, and just pay attention and trade accordingly, whatever the system you're using. Now, another thing that I want to show is be very careful about US dollar index. We had some red news today, which shake the dollar up a little bit, and this is how the US dollar index is. So my take was a B, C that we're supposed to be coming down here, and we did. Oh, sorry. This is gold. Excuse me. And now we are bouncing, right? You can see here, nice and we have 3, 4, 5, then ABC correction, and now we are bouncing. So that's separate. That's gold. This is the thing. It's like this was end of the impulse wave. Then this is A, ABC, B, and we're supposed to come down for C. So this is like wave 1, and then wave 2 maybe. If we stay below 1753, as long as we stay below 1753, we will be going down for another down leg for wave C. Let's go take a look at the actually the index profile. That's gold profile actually. So I'm gonna go take you to the US dollar index profile because it's very, very important now. And a lot of things depend on that, right? A lot of pairs, 7 USD pairs, plus indices, all that, everything depend on the USD. Okay, so this was my chart that we're gonna drop. So we start to drop, then we went up, and then we will try to stay below 1753. That's the key. Then we can continue going to the downside. Now this is Elliott wave 1, 2, 3, 4, 5. Then this is C, this is A, B, and then this is 1, 2, 3, 4, 5. Maybe we will be coming down here in this fashion to some of those fib level, for example. All right, so see this high here also in question, and 61% is all the way here, 1026. That's what I'm showing on my weekly chart, right? So this could be wave C underway. Out of that, we have wave 1, then wave 2. If we can stay below 1753, we will come down for 1.618 wave 3, followed by wave 4, and then one more push for wave 5. That'll be wave 3, around 61% of this whole move to the upside. Then we will continue to the upside again. All right, that's how the Elliott wave mumbo jumbo is. It's if you understand, it's very easy. If not, then yeah, you gotta live with that, right? Yeah. All right. So this is it for now. Like I said, that is this video was about gold, and gold is doing. This is what it's doing, and then it's probably gonna go to the upside, right? So let's see what happens. All right. So if you like what you saw, you want to be a part of it, you want to get the system, and you want to be subscribing, then you go to my website here. You can subscribe monthly or 6 months or yearly or lifetime, or you can sign up for one-on-one coaching, 10-hour Zoom teaching by me personally, right? So or you want to get the robot, then you can go here, whatever. All these things are here, right? So this is it for now, and don't forget to subscribe the YouTube channel so that you can get my videos as soon as I upload them. Sometimes I give you very, very nice setups, right? So you want to take advantage of that. All right, so bye for now, and talk to you guys later soon.